Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it Wild October. We're going to take a look at the monthly charts here on the Dow, the S&P, and the Nasdaq. We're going to take a look at and focus on the Dow Industrials this week. We focused on the Nasdaq last week and the S&P the week before. So we'll drill down and take a look at the weekly and daily charts on the Dow Industrials and the Elliott Wave pictures. I think we have two scenarios that look the best to me. Both of them imply declining moves over the short term, and I'm talking about short term by coming weeks. Okay, so we'll see how that plays out. Then we'll take a look at some interest rate sectors, the high yield bond fund, the 10-year yield, and the dollar index, which had a heck of a move on Friday. And then I want to finish the video by taking a look at Tesla. All right, so here's the Dow. The Dow was up 1,975 points for the month of October. So just when we have a really negative September, you think, wow, maybe we're really going to break down, but we got no follow through at all. And we come back up and we close. We're sitting at all-time highs on everything. Okay, so, and I mean on all the three major indices, not on the Russell 2000. That still looks like a mess. So, I mean, basically chopping sideways since March. Now, the S&P 500 was up 298 points. A big, strong candle in here also. Now, we're getting a little bit of divergence showing up as of the close of this last month, and we'll see, well, again, where do we go for the month of November? The Nasdaq up 1,050 points, but it's the same picture. Every one of these are giving us the same picture. Let's drill in and take a look at the Dow Industrials. So on Friday, let me move over a little bit so you can see what happened on Friday. Up 89 points on Friday. So yeah, we're sitting at a new all-time high. But intraday wise, we didn't quite get there. On a weekly basis, it's the highest weekly close ever on the Dow Industrials, sitting at 35,819.56. Now, the thing I noticed here about the weekly chart is look at the bars. It just, starting, we've been up 4 weeks in a row, and starting with this week of October 3rd, the range here. I'm looking at another window. Well, you can see it down below, 1153, rounded 1154. The range, well, this got a little bit bigger, 1206, but then all of a sudden 729, and this last week 402. This just looks like we're losing momentum in here. These two were about equal, and then we're just starting to lose momentum, and it fits with what I think is going on. Now, the other thing, let me show you now I'll go to the Elliott Wave picture. Well, no, I'm jumping ahead of myself. Sorry. I'll talk to what I wanted to talk to here in just a minute. Let's look at the Elliott Wave picture. Okay, let's start off with my orange analysis. This orange analysis says that we are working a flat. Okay, that we are a flat is an A, B, C, three wave, and then a 5-wave down. And yes, a B wave can go beyond the start of the A wave, just like it has done. A normal length wave B will retrace between 100 to 138% of A. So yeah, this could keep pushing a little bit higher even in here. But right now it looks just fine. We're looking for this to come back down, but it needs to roll over and turn down. Now, one thing I'm noticing, let's go to the blue scenario first. This is the other alternative because here's what I'm talking about here. Look at the RSI on the weekly, on the blue scenario. See how we've broken above it? This is what makes me gives me pause to say, maybe this is what's really going on. Because when I get a break of a trend line on our RSI like that, many times that's an indication of what's going on with the price action. So, I mean, there's nothing guaranteed, but here's what's happening with this scenario. I'm still looking for a move down, but what this says is we are in the 5th wave already. And the move down is merely a wave 2 after a completed first wave of the 5. So we're talking about the 5th wave, okay, right here, a 5th wave up. And this implies that we've had the first wave up of that 5th wave right here, and that we're working a second wave down. So then the real question is, how far down are we going to get for a corrective move? Is it going to come down and close this gap? If I just do a simple ratio analysis of 2 versus 1, 50% is down here at 35,004, right basically at about the top of the gap. Okay, so it'll be real interesting to see what kind of pullback do we get. That's really what I'm expecting in here. But what it tells you between the two scenarios, it says that both of these say that the next move short term is a pullback. Either it's going to be a shallow pullback like this, or it's going to be a much deeper pullback to accommodate the C wave of a wave 4. So we'll see how the waves unfold as we pull back. Okay, so that's where we're sitting with the Dow Industrials right now. Let me see if there's something else. Now I talked about everything I wanted to talk about. Let's take a look at the high yield bond fund, and I want to look at the moving average view. Let me shrink this down a little bit for you. Okay, here's the daily view. So it was down 23 cents on Friday. So it's still acting like risk off. It's a little bit of consolidation, but boy, if we break this, I think this implies that it's, truly saying, yeah, we're continuing to head down. I could see this happening in sync with the pullback I'm talking about with the Dow Industrials. And of course, on a weekly view, this has never gotten very, strong enough to take out the January, February highs of 2020. So it almost looks like it's just rolling over, but you need it to, truly continue to break down to show some severe damage in here. So that's the high yield. Where's the 10-year yield going? Here's what's happening with the 10-year yield. Okay, we closed at, let's see, 1.56% when you round it. So slightly down a little bit on Friday, but look how the high was all the way up here at 1.62%. So we came up and then we closed back down. When we look at a weekly chart, here's the view over here. And this dotted range is what I've had up here for a long time. I basically took the middle of the consolidation points in here and said, okay, this may form some pretty significant resistance. I had this back early at the beginning, early in the year, in the spring. And we got right up into it in March, right into the middle of this, came back down, and then we come right back up into it. Now, the real question is this going to form the same kind of heavy-duty resistance again, or are we going to punch through this and head up to the 2%? So that's what we're keeping our eye on right now here on the 10-year yields. And then what about the dollar index? Holy cow. On Friday, look at that move, up 0.77%. It's exactly what I was looking for in terms of when I talked to my members Thursday night. I said, this little zigzag here just looked like a corrective move. It had corrected 50% of wave 1, right here, 50%. And I said, if this is truly, right at the end of this, then this should turn and get ready to go up. Now, I had no idea it was going to have that kind of a move, but it looks to me like this is reinforcing the move to the upside. We'll see what kind of continuation we get. I continue to look for this to drive higher. So that's the picture. So far, the dollar index is reinforcing it. So that's the way we sit there. Let's take a look at Tesla. Wow, Tesla up 204.32 for the week. What a move. And it closed right on its high, I believe, or pretty doggone close to it. 11.15 was the high, closed at 11.14. Oh, $1.21 off the high. Well, this is the scenario that for the longest time I've been looking for. I've been looking for the wave 4. This is what I'm looking at, the wave 4. And so I am still, in terms of a flat like this, an A, B, C, This B wave is up right in the range, 138%. Could this continue to push higher? Yes. I got to say, you know, in the last few weeks and the way the price actions happened over the last couple of months, it does make me suspect of this move. And I'll show you an alternative in just a minute. But the other thing, though, there's a couple things to look at. When you look at this move and you say this third cycle wave up, we haven't hardly retraced anything in here. With this pullback, it was very shallow time-wise, as opposed to if we're working a cycle wave, okay, look at cycle wave 2. It took a long time. Now, that doesn't mean cycle wave 4 has to, but to put it kind of in sync with it, it would be nice to see that. But back over here, if you look at within cycle wave 3, look at the corrective waves, time-wise, they were almost identical to, let's see, if you look at, here's the high, 2, 4, 6 weeks. 2, 4, 6, 8 weeks, okay? Wasn't identical, but it was very close. It was in the same game, same ballpark, okay? But this, to say that this corrected right here versus here, it's a push. I'll show it to you in a minute. But the other thing I like about this is we'll look to see, do we reverse? Do we come back down? How far overbought are we? We're sitting at 90% on the RSI, and I use a 10-bar RSI. Where were we when we had 90% in wave 1? Well, we were right here. It was when we first hit 90%. We actually hit 90.7% right here. So whether we're here, it was 93.3. Yeah, we had a couple more weeks and at least one more major thrust week up, but it didn't take long for this to reverse itself back down. So we'll see what we get in here. Again, this is very shallow. This is would be a normal length wave 4 to pull back. And the reason I like this too is this is a target in terms of pulling back to the wave 4 of one lower degree, which is many times when you correct, that's what the indices, stocks, etc. will do. It's not a rule. It's kind of a guideline that you look for in terms of corrective action. Now, the alternative says this is what's going on, that we only get this little corrective move and that we're doing some kind of, we're in some kind of impulsive wave structure right now. We'll see. We're extremely overbought. We haven't hardly corrected, but this is the picture. I mean, it's definitely got a head of steam on it, and it's a heck of a lot of momentum. So we'll see what's going to happen. It's very, very interesting, but just I know everybody's going to, the bulls are going to sit back and say, oh, yeah, we're going, 2,000 and above. But we'll see. Just keep both scenarios in mind. All right, that's it for this weekend. Everyone, if you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this kind of information on a regular basis, head on over to joehenches.net and check out the website and the membership. Everyone have a great week. We'll talk to you on the next video.